Good morning, Jai Hind, and welcome everyone. In the last class, bacha, we had discussed the meaning of equity shares, the meaning of preference shares, advantage of equity shares, advantage of preference shares, the features of preference shares, features of equity shares. In today's class, we will discuss the retained earning. What is retained earning? Simple. Suppose if a company earn 100 rupees, after deducting all expenses, giving interest, everything, company earn 100 rupees. Now company have two options. That either company distribute that 100 rupees completely in all the shareholders, or if a company is a visionary company, if a company which have that growth target, if a company want to more and more develop, so instead of distributing the complete 100 rupees to the shareholder, what company will do, bacha? Company will simply not distribute all 100. Instead of that, company distribute 80 rupees and save the 20, keep the 20 in the business only for the growth of the business. So out of 100, company only distributed between the shareholder 80 rupees. So the rest 20 which company yet not distributed, which is undistributed, will act as a retained earning. So retained earning is equal to undistributed profit. So in one word, we can say retained earning is equal to undistributed profit of the business. Or you can write down a portion of the net earning which retain in the business for use in the future is known as retained earning. Okay? Acha, what is the use of retained earning? Suppose any sudden loss is there. So we have already a fund from where we can cover up that. Suppose business need the finance. Okay? So when business need the finance, business have one option that business can issue shares, business can issue debentures, business can go for bank loan. And retained earning also become an option that already business have a retained earning. So business can utilize that retained earning and complete their financial need. But retained earning is totally depend on some factors like what is the company vision. If company want to be more and more grow vision, more developing vision, the company will not touch the retained earning for financing. Company will arrange the finance from share debentures and keep the retained earning for the growth prospectus. If the company net profit is good, then company can use, because company is knowing that in the next 3-4 years I will again have a fund of retained earning. So, and retained earning is the cheapest source of finance, because you don't have to issue, you don't have to demand from public. Already you have the money in your business which will use in the form of finance. So if somebody asked you that what is the cheapest source of finance for the business, it is retained earning. Okay, and retained earning is coming in under the owner's fund. Retained earning is coming under the owner's fund. Always remember. So what MCQ can come from retained earning? Number 1, retained earning is equal to undistributed profit. Okay. Number 2, that retained earning can be utilized for self-financing. Number 3, that retained earning is the cheapest source of finance, because that not need to be issued to someone. It is already there in the business. What are the features of merit of the retained earning? Number one, retained earning is a permanent source of fund available to an organization because retained earning is there in the business only. That's why retained earning will be considered as a permanent source of fund. Second, retained earning not need to issue to someone. Okay. On retained earning, you don't have to pay the dividend to someone. On retained earning, you don't have to pay to the interest because retained earning is not a debenture part. Retained earning is not the shareholder part. It is already the business part, what the business is keeping in the business for any uncertainty. So on retained earning, bacha, they don't have to provide a dividend to someone. They don't have to provide the interest to someone. So you can say that is the cheapest source of finance. Okay. And when no shareholders will come because of retained earning is completely the business authority. So when no shareholder will come, no more control. No more control means more freedom. Business can do whatever the business want to do. ठीक है? अच्छा. देखो, two things are there. One company who is knowing that I have a very backup support. I have already that situation. I already have that much fund that if I take this decision, a risky decision, so maybe that I will earn a huge amount of profit, but at the same time, maybe I will secure the huge amount of loss also. Both situations are there. So the company which have a strong backup, that company will take the decision, and if any loss will be there, that the strong backup will help to cover up from that loss. But if you don't have the backup, if you don't have what you can say help position, then you always have a fear to take the decision. Why so? Reason is very simple. Because you're knowing that if I lose, then I don't have the backup to cover up that. So when you have retained earning as a backup, undistributed profit, the profit is already there in the business in the form of undistributed. When that backup is there, then you can take the risky decision where the chances of losses are there. Because you know that if I fail, already the backup is there. Okay? Achha. When retained earning is there, the value of company will increase. When the value of the company will increase, the share value of company market price will also increase. Simple सी बात समझो कि if two companies are there, you are knowing one company is very financially strong and one company is just normal. So as an investor, I will always love to invest in that company which have the strong financial position. Instead of the other company which not have the strong financial position. Okay? अब देखो बच्चा, now we will discuss the GDR, ADR and IDR. What is GDR? First we will discuss. The local currency share of a company are delivered to the depository bank. The depository bank issue depository receipt against this share, and such depository receipt denominated in US dollar are known as a global depository receipt. Why US dollar? Because US dollar is an international money. Okay, so GDR is a negotiable instrument. Negotiable instrument in the accountancy class only I told you that negotiable instrument means which can be transferred from one person to other person freely. ठीक है? GDR is an instrument issued abroad by an Indian company to raise fund in some foreign currencies and is listed and traded in a foreign stock exchange. Okay. For example, suppose for understanding the complete GDR concept, suppose Tata is working in India. Tata is an Indian company, but Tata needs some finance from foreign investment. So Tata will issue the GDR, Global Depository Receipt. And the foreigners, the foreign companies who are interested to invest in Tata company, they will invest through their depository bank and in the form of US dollar. And Tata will get it the foreign currency US dollar in the form of capital. ठीक है बच्चा? So this is the global depository receipt. So when your share become global, then you need the foreign currencies, because Indian currencies are not everywhere. And in other countries, the other things are there. Like Real is there, Pound is there. But completely, it is a very most accepted international money is US dollar. US dollar. तो GDR is generally done. अब देखो यहां से क्या MCQ निकलेगा? GDR is generally deal in which currency बच्चा? US dollar. Okay. Who issue the GDRs? The depository bank. Depository bank will issue the GDR. Why the GDR is needed? When a company need the finance from abroad, outside of the country, the foreign investment, foreign currencies, then they issue the GDRs, Global Depository Receipt. And when they need the money from India only, so they can issue normal shares and buy the Bombay Stock Exchange, National Security Stock Exchange. They can have a amount in the form of capital. ठीक है भाई? And the most important is the GDR holder can convert their share, their GDR, Global Depository Receipt, anytime in the number of shares. ठीक है भाई? तो GDR they hold, and whenever they want to convert in the form of shares, then easily they can convert at any time. ठीक है? But GDR is not yet converted in share बच्चा. That's why they don't have any voting rights. But they have the dividend and capital appreciations right. They will get it the dividend. They have the capital appreciation right, but they don't have the voting rights. And the reason is because GDR is a global depository receipt yet not converted into share. And as we know, the GDR holder can convert their receipt anytime in the number of shares. So when they convert the GDR in the number of shares, then they will get it the voting rights also. Companies like Infosys, Reliance, Wipro, ICICI have raised money through issue of GDR. So these are the very popular companies which are issuing the GDR, which are receiving the foreign currencies in the form of GDR. अब देखो बच्चा, one thing is there, American Depository Receipt. By the name itself, it is very geographical restricted American. So this depository receipt is issued by a company in the USA, United States of America, and known as American Depository Receipt. ठीक है? And as it is not a global, so their geographical boundaries are only restricted to the American market only. So ADR can be only bought and sold in the American market only. Now, what is the basic difference between ADR and GDR? GDR can be a global, it can be issued to anyone. But ADR is an American depository receipt. That's why it will be issued to only American citizen. देखो ये बच्चा basic difference है कि global depository receipt is for everyone. There is no geographical boundaries of global depository receipt. But ADR have a Geographical boundaries limit that it is only in the American market and it is only for the American citizen only, not to everyone. ठीक है? And ADRs are listed in the stock exchange of US. It is a very understood thing that when it is done in America, so the currency which is used in ADR is obviously it is US dollar. ठीक है? And as it is a deposit receipt only, so they will not get any rights of vote in the company. They will only get the right to get the dividend. देखो भाई, the next one is Indian depository receipt. When American depository receipt can be, so why not Indian depository receipt? So Indian depository receipt is a financial instrument denominated in the Indian rupees, like American depository receipt in the US dollar, because in America US dollar is there. So in India rupees is there. That's why Indian depository receipts are there in the form of Indian rupees. And the main purpose for creating this particular depository is to enable a foreign company to raise funds from the Indian securities market. Like suppose any foreign companies need the money from India. So through the IDR, they can take the money from India as an investment. So IDR is a specific Indian version of the similar global depository receipt. Only the difference is that in global depository receipt, the money is US dollar, and Indian depository receipt, the money is Indian rupees. The foreign company issuing IDR deposits shares to the Indian depository. Okay. Ab Security and Exchange Board of India is what, bacha? The Security and Exchange Board of India already we discussed, but one more time I am just telling you. Security and Exchange Board of India is a organization which are holding and controlling all the share purchase and sell, all security purchase and sell in India, controlling all the stock exchange also. Okay. So in the turn, depository issues receipt to the investors India against these shares. Ab bacha, what is the benefit? Like as the other shareholder, you will also get it the bonus and dividend if you are the IDR holder in India. And according to the SEBI guideline, IDRs are issued to the Indian resident in the same way as domestic shares are issued. Like in American depository receipt, it is issued to the Americans. So in India IDR, it is issued to the Indians. The issuer company make a public offer in India. The resident can bid exactly the same format and method as the bid for the Indian share. So everything is same. Only the thing is there that IDR is a medium by which the foreign companies can raise the fund in Indian rupees from the Indian investors. Okay. Okay. So Standard Chartered PLC was the first company which issued the Indian depository receipt in Indian security market in June 2010. So please quote this one. It can be, because it can ask that with the company which first time issued the IDR in India is a Standard Chartered PLC company. And the date is also very important, June 2010. Okay. So bacha, these all are the method by which the money can be issued. So in the owner's fund, bacha, what we had completed, just have a look. We completed that if sources of owner's fund, if money is needed in the form of owner's fund, then equity shares is a permanent source of capital and it is an option. Second option we have as a preference share. Difference between equity share and preference shares already we discussed. Equity share is a permanent source of capital. Preference shares are not. Equity share will get the dividend at the last and it is not compulsory, but preference shares having a rate, fixed rate, and according to that preference shares are getting the dividend. Retained earning also we discuss. Undistributed profit which remain in the business is also the source of owner's fund. Okay, global deposit, global deposit receipt open for all globally. Money in which the global deposit receipt will be US dollar. American deposit receipt is also a form of owner's fund, but it is only for the American citizen, available in the American market. Similarly, we have Indian deposit receipt also, which is available for Indian citizen, and the foreign company can arrange the fund from Indian deposit receipt but in Indian rupees. The first company which issued the IDR in India is a Standard Chartered PLC. So bacha, in the next class we will discuss the various sources of borrowed fund. Okay, so till then, take care, thank you, and we will waiting for you on 2nd of November. Please come and join. Okay, thank you.